Hey guys, thanks for joining me again. Today we're going to do something real simple and straight to the point. How to analyze a hotel deal to determine the value. Now, there's actually three types of way of how you analyze it, but I'm doing the real quick and easy oversight. 3-5 minutes or less. But there's basically three ways people look at analyzing hotels. Now, on the economy brand, kind of the lower end brands, people typically do anywhere from 3 to 4 times the revenue. If you're an owner-operator, well, they simply do this math. After they pay all their expenses, they can make 10% on their money and pay themselves a salary. If they make 10%, that's just the deal. That's the value in that. But we're not talking about that. We're talking about how to really determine if this is a deal or no deal before really going into deep analysis. So let's go here. Now, there's three main things you need to know whenever you're doing a hotel to calculate the numbers. Number one, you need to know the number of keys. In hotels, they say keys. You may hear doors, but the key word is keys. You need to know that. That's number one. Number two, you need to know the occupancy, current average occupancy, right? Once you have that, and we're just talking about the percentage. And then number three, you need to know the ADR, the average daily rate. In apartments, they say monthly rent. Well, in hotels, they do the average daily rate, okay? We can begin to break out our numbers. What's important with the keys and doors? So let's say in this particular deal, we have 150 keys or 150 doors, right? And then let's say the average occupancy is 70%, all right? And then the average daily rate is $100 a day. Once you get this, man, as my mama always used to say, we cooking with grease. You can't cook that chicken without no hot grease, baby. All right, so now we're cooking with grease. If you have the doors, you need to determine what's the total available rooms per year. So you say 150 times 365 days. That means you have over 54,750 rooms available. That's the number of rooms you can sell in 1 year, all right? So you have 54,750 rooms. Now we want to determine the occupancy, which that means the number of rooms sold. So you take your number of rooms available in a year, which was 54,750. Now we want to know how many were sold. Number rooms sold. So then you will take 54,750 times 70% occupancy. Remember that? Because that's our total number. So what that means is 54,750 times 70% occupancy, that comes out to be 38,325. That's the number of rooms sold in a year. Now, the next step, what's the gross income? Well, simply all you do is take that $100 that we talked about, which was the ADR, and you multiply it times that. That's gonna give you your gross income, right? So the gross income for the year is $3,832,500. That's the gross income for the year. I hope you're rolling with me. I think you got it. We need to know the NOI. Now, typically for these brands that we're looking at limited service. This is more a calculation for limited service like a Marriott, Hilton, IHG. Typically those operate at a net of 25% to 30% net of the gross income. So 25 to 30% of the net income is what the NOI is. So in this example, I'm just gonna go in the middle and let's just say 27%. So we're gonna say 27% times the NOI. That's gonna give us $1 million profit. 1,034,775. That's our NOI, all right? This is what we're doing. We buying cash flow, baby. I like $1 million. I don't know about you, but I like $1 million. So now that we have $1 million bucks, now to determine the value is simple. You take the NOI, it's just like apartments. You just take the NOI and divide it by a cap rate. Now in the industry, cap rates for the hotels in the Midwest, they're about 8%. Unless you're, naturally if you're in Florida or you're in New York, naturally those cap rates drop down to 6 or 7%. It really just depends on the brand and the location. But yes, hotels sell at a higher cap rates than most apartments. All right, so in this example, we're gonna say the cap rate is 8%, and we knew that the NOI was $1,034,775. So that means this hotel that we're doing example is worth $12,934,687. All right, that's the value. It's that simple. Look, you don't have to get all these multiple formulas and all this. Look, man, this is basic math, man. Where do you get this? You're gonna ask for a star report. They'll give it to you. You'll look at their profit and loss. If you do the profit and loss and they gave you the occupancy and the ADR and your numbers don't come out to something similar to what they have, then something's wrong, all right? Now, this is the value of that hotel, but let's take it a little deeper. Naturally, this hotel gonna need repairs, and in the hotel industry, they call them PIPs, all right? So let's say this PIP or this hotel needed a renovation of, let's say, 15 a door. Yeah, we'll say 15 a door. So renovation cost is $15K a door, all right? So $15K a door, remember we have 150 rooms, so the cost of the renovation for 150 rooms is $2,250,000. All right, again, we're just doing a rough summary of the value. And let's say the purchase price, this is the renovation, we paid purchase price is even $8 million bucks. So we're all in this deal for $10,250,000. So my point is this worth a deal? It's worth $12,900. We could be all in for $10,250,000. What do you think? Well, I think this is potentially a nice deal. Now if you want to get into details, of equity multipliers and internal rate of returns, but we're not going to get there. But the bottom line is you can make just over $2 million on this deal. So you tell me, deal or no deal? Hey, that's my time. Thanks for joining us. And hey, join us for our live podcast where we talk about deals about this every Thursday, 12 noon. You can find us at Apartment Investing Secrets live on our Facebook, where we'll interview all our students, and we also talk to other sophisticated investors that's been doing real estate, apartment deals, and hotel deals. Whether they're large or small, you can get it right there with us. See you soon.